There's a moment in every trader's journey when they realize the market was never their real opponent. The real battle was always happening inside their own mind, not on the chart, not in the candles, but in the heartbeat that quickens when a position goes against them, in the tension behind every impulsive click, in the quiet fear they try to hide behind strategy and analysis. This video is not about indicators. It is not about predictions. It is not about finding the perfect entry. It's about something far more important: your ability to remain calm in a world designed to provoke your deepest instincts. Because clarity is not found in leverage. Clarity is found in control. Control of size, control of emotion, control of the mind that makes every decision you take. Welcome to Mind Over Markets, and welcome to a new way of seeing your trading psychology not as a weakness to fix, but as a skill to master. Let's begin. Most traders don't lose because they cannot analyze the market. They lose because they cannot analyze themselves. And nothing exposes the truth about a trader more brutally than leverage. If you pay attention closely, you'll notice something. Leverage doesn't just magnify your position size. It magnifies your emotions. It magnifies your fears. It magnifies your hopes. It magnifies the weakest parts of you, the parts you've spent years avoiding. A trader using calm size is rational. A trader using oversized leverage is emotional. And emotional traders don't trade the market. They trade their insecurities. This is a story about control, not control over price, not control over direction, but control over yourself, your patience, your impulses, your mind. Because without that, no amount of technical talent will save you. Let me tell you something many traders never realize until it's too late. Your leverage is not determined by the market. Your leverage is determined by your nervous system. When your size is too large, your body enters survival mode. Even if you don't admit it, even if you think you're calm, your brain knows the truth. Your breathing changes, your muscles tighten, your prefrontal cortex, the part responsible for rational decisions, begins to shut down, and the emotional brain takes over. You're no longer responding to price, you're reacting to pain. Most traders call this the market turned against me. But that's not what's happening. What really happened is that you turned against yourself the moment you used a size that your mind wasn't built to handle. Calm size creates clear mind. Oversized leverage creates chaos. Some of you listening to this know exactly what I'm talking about. That feeling when you enter a trade that's slightly too big, you tell yourself, it's okay, I can handle it. But a few minutes later, you notice your eyes glued to the P&L. Not the chart, not the setup, the P&L, ticking, flickering, pushing your emotions up and down. You're no longer a trader. You've become a gambler watching a slot machine. Every tick feels like a heartbeat. Every candle feels like a threat. Every pullback feels like a catastrophe. You know what that is? That's your body telling you the truth. Your size is too big for your psychology. And the bigger your leverage, the smaller your clarity becomes. People think leverage is dangerous because it can blow up your account. But the real danger is not financial. The real danger is psychological. Because oversized leverage slowly destroys your decision-making ability. And once your decision-making goes, everything else goes with it. Let me explain something most traders never hear. Humans are not built to tolerate large risk in fast-moving environments. Our nervous systems were designed for survival, for reacting to threats, for avoiding danger, not for managing a 5-figure unrealized P&L swing in 30 seconds. Every time you increase your leverage, you're not just increasing your risk. You're increasing the pressure on your mind. And pressure reveals the truth. Some traders think they need more discipline, but what they really need is less emotional load. Most discipline problems are actually size problems. You overtrade because your size is too big. You panic exit because your size is too big. You revenge trade because your size is too big. You violate your stop because your size is too big. You subconsciously know that if the trade hits your stop, it will hurt more than you can handle. So your brain does everything it can to avoid that pain, even if it means doing something irrational. This is why the concept of calm size exists. Calm size is the position size that keeps your mind clear. It's the amount you can trade while still remaining yourself, not the emotional version of you, not the desperate version, not the fearful, hopeful, erratic version, but the calm, rational, observant version, the one capable of making good decisions. You may think you need to push harder, size bigger, and trade faster, but in reality, the key to longevity isn't intensity, it's clarity. And clarity only appears when your size is small enough for your mind to breathe. Think about the last time you traded too big. Think about how your mind felt. Think about how every movement of price felt personal, as if the market wasn't moving randomly, but moving against you specifically. That's what oversized leverage does. It changes the way you interpret reality. It makes you believe the market is watching you, reacting to you, hunting you. It makes you forget that you are just one small participant in a massive system. Oversized leverage makes the ego louder. Calm size makes the mind quieter. Let me tell you a story. Every trader has lived a version of this story, even if they don't admit it. A trader starts with a small account. They take small positions. The losses don't hurt. The wins feel good. The mind is clear. Trading feels simple. Then one day they see something on social media, a screenshot, a brag, a quick 10x gain from someone who claims they just went all in. The trader thinks, why am I wasting time? I'm playing too small. I need to be aggressive. So they increase their leverage, and suddenly everything changes. At first it feels exciting. The adrenaline hits. The possibility of a big win feels intoxicating. But then the trade moves slightly against them. Not even a big move, just a normal pullback. Something that wouldn't have bothered them before. But this time, it feels different. It feels threatening. Their breathing shifts. Their attention narrows. Their hands sweat. They check the P&L every few seconds. They're no longer thinking clearly. They're no longer following a plan. They're no longer analyzing the chart. They're simply trying to avoid pain. And in that moment, the market owns them. This is the psychological trap of leverage. It gives you the illusion of power until it takes away your clarity. Calm size is the opposite of this. Calm size is the size at which you can observe without fear, where you can execute without hesitation, where you can follow your plan without your emotions overpowering your logic. Calm size is not weak. Calm size is power under control. A mind anchored in clarity. A trader who understands that longevity is the real edge. Some traders want to get rich fast, but the best traders want to stay in the game long enough for their edge to manifest. And you cannot stay in the game if your mind is constantly burning. Let me tell you this clearly. The goal is not to eliminate emotions. The goal is to prevent emotions from controlling your decisions. And the most powerful way to do that is to trade a size that keeps you calm. You know you found your calm size when you don't care about single losses. Your heart rate doesn't spike. You can walk away from the screen. You don't feel the need to interfere with the trade. You can watch price move against you without panic. You follow your stop without negotiation. You focus on the setup, not the money. Calm size is the size at which you remain human, not the anxious, reactive animal your brain becomes under stress. And here's the deeper truth. Your calm size is not a number, it's a feeling. It's the feeling of psychological safety, the feeling that no matter what happens, you can handle it, the feeling that you are trading with clarity, not desperation. Some traders will hate hearing this. They want me to say that they should size up. They want me to say that courage means trading big. They want me to say that risk is the path to success. But here is the honest reality. Courage is not trading big. Courage is trading clear. Courage is having the humility to trade a size that keeps your mind sharp. The traders who blow up are the ones who think size equals bravery. The traders who succeed are the ones who understand that clarity is everything. You cannot see the market clearly when your mind is drowning. Calm size isn't small. Calm size is sustainable. Calm size is rational. Calm size is mastery. This is the foundation of control. Control over leverage. Control over emotions. Control over decisions. Control over yourself. And this control begins with a question only you can answer. How much can I trade while remaining calm? Most traders hear the phrase trade small and interpret it as weakness, but they never stop to ask themselves a deeper question. Why does small size feel weak to me? What part of me is trying to prove something through risk? Behind every oversized position, there is always a hidden story. For some traders, it is fear of missing out, fear of falling behind, fear of being average, fear of not catching the big move they've been dreaming about. For others, it is ego that whispers, "You're smarter than the market," ego that demands proof, ego that thinks one big win can erase months of discipline. And for many traders, it is impatience, the belief that success should come fast, the belief that one trade can change everything, the belief that money made quickly means success earned honestly. But this is an illusion, a trap disguised as ambition. Oversized leverage gives you the emotional high of possibility, but it also gives you the emotional low of destruction. And here's the truth that very few traders ever accept. If your goals make you increase your leverage to a level that destroys your clarity, then your goals are too big for your current psychology. Clarity is more important than speed. Longevity is more important than intensity. And mental stability is more important than maximizing every trade. Let me tell you something important. The best traders don't think in terms of how large can I size. They think in terms of how clearly can I think clarity is the true leverage, the leverage that multiplies decision quality, the leverage that compounds over years, the leverage that allows you to stay objective in environments designed to trigger your instincts. Because the market is not built for human psychology. It is built to challenge it. Every spike is a test of fear. Every rally is a test of greed. Every reversal is a test of patience. And oversized leverage amplifies these tests until they overwhelm you. To control your leverage is to control your mind. And to control your mind is to reclaim your ability to trade with intention. Think of the last time you hesitated to enter a trade. Was it the setup or was it the size? Think of the last time you cut a winner too early. Was it the strategy or was it the emotional load created by too much leverage? Think of the last time you moved your stop. Was it logic or was it panic caused by a position too painful to accept? Most so-called technical problems are actually psychological ones, and most psychological problems originate from size. There's a reason why experienced traders say, decrease your size, not your strategy, because size is the silent killer of consistency. A strategy that works at calm size becomes chaos at oversized leverage. A trader who is disciplined at calm size becomes emotional when overloaded. A plan that is clear in theory becomes fragile in reality when the numbers are too big. If you want true consistency, you must build it at the size where your mind performs at its best, not the size where it collapses under pressure. Let me tell you something about pressure. Pressure is not the enemy. Too much pressure is. A small amount of pressure sharpens the mind, but excessive pressure makes the mind narrow. You stop thinking in probabilities. You start thinking in outcomes. You stop seeing the market. You only see your P&L. And once you become attached to the outcome, you are no longer following your system. You are following your emotions. This is why traders begin to pray, why they beg the chart to reverse, why they talk to their screen as if the market can hear them, why they hold losing positions hoping for miracles that rarely come. Oversized leverage does not just magnify your emotions, it magnifies your delusions. It makes you believe you can control what cannot be controlled. It makes you believe the market owes you something. It makes you believe you deserve to win because you need it more. But the market does not care. The market does not respond to need. The market does not reward desperation. The market rewards clarity. And clarity disappears when leverage is too high. If you listen closely to your mind during a high leverage trade, you will notice something fascinating. Your thoughts become louder. Your fears become sharper. Your impulses become faster. Your doubts become heavier. This is not a sign that you are a bad trader. This is a sign that your size is fighting your psychology. Your goal as a trader is not to eliminate emotion. Your goal is to reduce the emotional volume enough that you can hear your logic again. Imagine for a moment that every trader has an internal emotional threshold. Below that threshold, you remain calm, observant, strategic. Above that threshold, you become reactive, impulsive, irrational. Leverage pushes you up that scale. And the higher your leverage, the faster you hit that threshold. Calm size keeps you below it. Calm size allows you to think clearly. Calm size allows you to trust your process. Calm size allows you to trade without emotional distortion because the market is already uncertain. The market is already unpredictable. The market already contains chaos. Why would you add internal chaos on top of it? There's a concept in trading psychology called cognitive load. It refers to how much mental weight you can carry before your brain becomes overloaded. Oversized leverage increases that load exponentially. It makes you overthink. It makes you doubt your entries. It makes you lose confidence in your exits. It forces your brain to solve emotional problems instead of analytical ones. And here's the dangerous part. When your cognitive load exceeds your capacity, your brain shuts down logical thinking entirely. You stop analyzing. You stop planning. You stop strategizing. You simply react. This is why traders behave irrationally when the stakes are too high. This is why traders do things they said they would never do. This is why traders look back on their behavior and say, "What was I thinking?" The truth is simple. You weren't thinking. You were reacting because your leverage was controlling your mind. This is the foundation of everything. Your position size determines your state of mind. Your state of mind determines your decisions. Your decisions determine your results. This is why professional traders spend more time controlling their size than trying to force outcomes. Let me paint a picture for you. Imagine two traders taking the exact same trade, same entry, same stop, same target, same chart, same setup. Trader A uses calm size. Trader B uses oversized leverage. To the market, these two traders are identical, but internally their reality is completely different. Trader A sits calmly. He watches the chart without anxiety. He allows the trade to play out. He accepts the stop if it hits. He accepts the target if it hits. His mind is quiet. Trader B feels every tick. His heart rate rises, his muscles tense. He shifts in his chair, his breathing changes. He questions the setup. He zooms in, he zooms out, he moves his stop, he exits early, he re-enters impulsively. The setup was never the problem. The problem was leverage. This is why so many traders sabotage themselves. They think they need a better strategy, more indicators, or more experience, but in reality, their strategy is fine. Their indicators are fine. Their experience is enough. It is their size that is destroying them. Calm size reveals who you are as a trader. Oversized leverage distorts that image. The calm trader is a strategist. The overloaded trader is a survivor. And trading from survival mode is the fastest way to lose everything. The mind cannot operate well in fear. It cannot think clearly when overwhelmed. It cannot see opportunities when blinded by emotional noise. If you want to trade well, you must protect your clarity. If you want to protect your clarity, you must protect your size. And if you want to protect your size, you must respect your psychology. Because in trading, your psychology is not just important, it is everything. In trading, most people search for the strategy that will set them free. But the truth is, simple freedom does not come from the market. It comes from your mind. A calm mind creates consistent decisions. Consistent decisions create long-term results. And long-term results create the kind of trader who no longer fears the market because they finally understand themselves. If today's message resonated with you, remember it the next time you reach for more leverage. Ask yourself whether you're trading for clarity or trading for excitement, whether you're guided by a plan or pulled by an impulse, whether you're acting from strength or reacting from fear. Your future as a trader is shaped by the size you choose today. Trade small enough to stay calm and calm enough to stay clear, because clarity is your true edge in trading and in life. Thank you for watching Mind Over Markets. Until next time, trade with intention and let your mind stay quiet. ChatGPT ko the Makloi, OpenAI Hong Su Dung Duli.